Hello, Mark Sturdy here with 7 days ahead's highlights from our analysis of week of the 19th of April 2022. Let's look at the summary. You'll see that we are still bulls of the dollar against everything, with renewed vigor against the yen, since we thought last week it had gone so far so fast that we were cautious about it going weaker still, but it has, and breaking important levels looks to go weaker still. One interesting detail is, let's just look at the general situation, with regard to the euro and how bullish the dollar looks. The big picture we know, this is the continuation of the weekly chart, complex head and shoulders top, driving the market down. Once beneath these prior lows, the resistance in the prior lows stopping the rally, continuing the bear trend. And in the last week, we see this breaking down beneath this prior low, suggesting if it's sustained, another bear leg in the offing. It is worth noting that there is slight reluctance in sterling. Sterling is going weaker, no question about it, against the dollar. But if we look at the detail, there is a little more pause in the weakness of sterling. It's bounced 1, 2, 3 times off this 130 level, 129.97, whereas the euro is broken down quite clearly, the sterling hasn't. And so one implication of that is that sterling is strengthened against the euro and right up against this important level, very important level, going back to 2016, with the possibility of a sterling breakout out of this trading range. It hasn't been established yet, but that's something to watch for, and you should look at our levels, in particular short-term levels, 121.19, 120.70. Break of those levels would probably be conclusive for further strength of sterling against euro, but that hasn't happened yet. Something to watch our levels for. If we moved on to stocks, we're standing aside. We're standing aside because there is a good deal of uncertainty. In particular, let's look at the Euro Stoxx 50. The market's come down and is dithering around these long-term levels of support, reaching back to 2015, very long term. There has been a rally, this is the weekly chart, but it found itself staggering into resistance from these prior lows, and it's failed. And in the short term, over the last week, we can see the market is persistent in testing the support from these prior highs here, 37.24. A short-term break of that would suggest another bear leg. There's uncertainty throughout all these stocks. The one market that is of interest, that looks less uncertain than others, is the FTSE. It's right up there at its prior not all-time high, recent high in earlier 2022. And if we look at that's the June contract, it's already higher than that. Continued closing above that would suggest it's good support and might be a ratchet for another bull leg. But given the condition of the other markets, we're reluctant to get too excited about this until, for example, in the short-term chart, the market can break 76.35, which it hasn't done yet. Just very quickly, let's look at the Nikkei. The Nikkei, as I've said many times, we are very bullish long-term, but medium term, nothing, nowhere near the previous highs of 2021, and short-term, a lot of dither and uncertainty. Stand aside. So, in short, we're standing aside from all of them. The most interesting of them all is FTSE 100. If the others can stabilize, it might be able to gain some upward momentum. Turning to bonds, let's look at the bonds. We are bullish we are bullish of yields all through the market, and the most important and obvious and central chart is over the last month, recently, breaking of this very long-term 22-year downtrend resistance, established once, twice, 3 times. That has clearly been broken. If you look at that over the last week or so, and even in the last few days, there's been an attempt in price terms to rally, failed at the first resistance. This is a well-established and continuing bear trend of price, bull trend of yields, with no let-up in sight. Commodities. We are bullish of both commodities, both oil and gold. But there are short-term uncertainties. Let's quickly look at this. Short-term uncertainties, meaning that you need to check our levels quite carefully. The bull case for oil stems from this complex, but I think clear enough head and shoulders, bull head and shoulders reversal. It also stems from the support provided by this line from prior highs, successive prior highs, establishing a good line of support, which the markets bounced off in the weekly chart once, twice. Look at the detail in the day chart. It adds up to quite an interesting possibility of a continuation triangle. We might have thought we'd broken out of it yesterday, but today's price action has brought it back within. That needs to be very carefully watched. Any clear, confirmed break of this triangle would be exciting, I think, both in the short and the medium term, both in this chart and that one. So watch oil closely. Gold, we are bullish, have been bullish, and remain bullish with some question marks. So we're not out and out bullish of either of these, but we are very closely watching, looking to go bullish. This position in gold is this medium-term double bottom reversal, founded on the 1704 support from this prior high. It broke up the market. The pattern completed some weeks ago. We can see 6 or 7 weeks ago. So we have been bullish. The market went ahead very quickly and then pulled back briskly, but it found support exactly where it should have done, between 1880 and 1919. And then it's bounced again. So we remain bullish for this because the ultimate target for this medium-term pattern is up to about 2200 here. Short-term, though, we're bullish as well. Well, this is the weekly chart in the specific June contract. Slightly less of a perfectly formed double bottom, but just about there. Specifically in the June contract, as opposed to the continuation chart, the important support is 1920. But coming back to the situation, so we have this medium-term bullishness, and we thought we had short-term bullishness in the day chart, with this double bottom here in the day chart. Fortunately, we had some closes above, but the market today has pulled back beneath. So there's some uncertainty short-term. So we are looking for bullishness. We are bullish medium-term. We want to have a corroborating or a strengthening short-term signal, and that has failed, but it may yet revive itself. So watch the gold closely and our levels in our research. Thanks very much.